Hello, dear traders. On October 12, stock indexes opened the Asian trade with a rise. Stock market indicators in Japan and Australia also increased following the growth in the US stocks. The Japanese Nikkei added more than 1.7% despite weak macroeconomic reports issued in Japan. The rally in the stock market could be explained by the moderately dovish rhetoric of the Federal Reserve. Its officials were providing comments from Monday until Wednesday. Also on Wednesday, the Fed published its recent meeting minutes. The document unveiled that an additional key rate hike will highly depend on inflation growth. Some politicians said that the focus was shifting from hikes to how long interest rates should be kept at a restrictive level. Notably, high yield on treasuries is also acting as a restrictive factor. The growth started in the middle of July, and the achievement of a multi-year highs provides the central bank with a desired effect without additional key rate hikes. Such an idea has already been raised by Fed Governor Christopher Waller. Not so long ago, he said that the tough situation in financial markets would go to some of the work for the Fed. Meanwhile, his colleagues, Michelle Bowman, is promoting a UK rate hike, saying that inflation in the United States still exceeds the 2% target. That's why traders are likely to pay very close attention to the consumer price index figures, which are slated for release today. And the US dollar index opened a new trading day quite sluggishly near the level of 105.70 points. Since the beginning of the week, it has been slightly low. It seems that the US dollar has faced some obstacles as the opposite factors of a rise and fall are offsetting each other. At the same time, speculations about a possible change in the Fed stance are becoming stronger, thus fueling concerns about the US dollar's dominance. Against this backdrop, during the Asian session, the USDX dropped to the range of 105.50 and 105.70 after consolidation. Unlike the greenback, the Yuan opened the day with a high volatility. During the short period of time, the Japanese currency tested the high of 149.30 and slid to 148.90. Notably, price swings in the currency market are worrying Japanese financial authorities more than the Yuan's devaluation. And today we have seen both scenarios. The dollar-Yuan pair is hovering within a wide range, still trading along the handle of 149 yen. Nevertheless, the Japanese currency has no reason to outperform the US dollar. The currency is likely to continue losing value amid the ultra-loose monetary policy of the Bank of Japan. What's more, today, Bank of Japan board member ASAHI NOGUCHI has commented on inflation, salaries, and the monetary policy stance. He has warned that the regulator could hardly be optimistic about a rise in salaries. For your reference, a drop in salaries is usually caused by the weak yen. That's why inflation and salaries are still far from their targets of 2% and 3% respectively. Curiously, the speaker cannot even imagine when the goals will be reached. Japan has been fighting stable deflation for several decades, and this phenomenon has been called Japanization. It seems that this term could spread to the world's second-largest economy, and the Chinese yuan continues to fall regardless of a rise in the interest rates. What's more, the national currency reacted very modestly to the news from Central Hygiene Investment. The state-owned investment company announced that it raised its share in China's Big Four banks. It's obvious that this action should have boosted market confidence. However, investors seem to be waiting for particular stimulus measures from the Chinese authorities, and the government has been making promises since the beginning of the year, but none of them have been kept. In this light, investors' confidence is only fallen. Thus, the yuan failed to gain in value amid the weak US dollar, which dropped to a two-week low. The Australian dollar, on the contrary, benefited from the situation and tested the high of 0.6430, but later the Australian currency declined to the supported level of 0.6410. The geopolitical tension and higher oil prices may push up inflation. This, in turn, may force the Reserve Bank of Australia to take another hawkish action. In other words, the Aussie made an attempt to advance amid a rise in risk sentiment and oil quotes. However, during the Asian trade, it failed to gain in value. It closed near 64 cents. The New Zealand dollar is also declining against the greenback. On Thursday, it continued falling within the daily range of 0.5996 and 0.6027. As a result, the currency dropped lower from its 2 months high to trade slightly above 60 cents. The fact is that the Reserve Bank of New Zealand seems to have reached the peak of the key interest rate hike. In addition, traders prefer to remain cautious ahead of the elections scheduled for Saturday. Everyone understands that the new administration will face a lot of economic problems. Some of them, including the cost of living crisis and a big national debt, could hardly be settled fast. This is all for now, but keep in mind that the market is changing constantly. Subscribe to the InstaForex TV channel. Leave your comments and questions below, and we will be happy to get feedback. See you in several hours.